Guys, today we'll be analyzing the Sp500 index and the Dow Jones Industrial Average Index. Before doing so, I would like to remind you our trading course named Learn How to Trade Financial Markets with Indicators, a technique unique in the world of trading, published on greenfair.com. Let's start with the Sp500 analysis. So what we see here are two sections. In the first one, you see the naked price enveloped between resistances and support, and as you can see here we have an oblique support detected by linking the lowest point hit over March and these two points between 3000 points and 3100. So what is happening right now is visible here, analyzing the hard bands. Okay, as you can see here, the price is almost approaching the upper band. The upper band is passing now by 3200 points, so from here we should be expecting a reversal. Now, in terms of derivative, as you can see here, the hard bands are now starting to be horizontal. Still they are a little bit in uptrend, but as you can see here, the curve is getting horizontal, and then we should be expecting something like that, or something like this, or a real downtrend. Now, in terms of price action, as you can see here, we have a double top, relative double top around 3240 points. So only above or at the break of this area we can understand what we might happen over the next days. Okay, this is a daily chart. Now if we swap into a weekly chart, we might have a better idea of what we should be expecting over the next weeks. Okay, as you can see here, we are inside a rectangle. Okay, now today is Wednesday, and as you can see here, so far we have a sort of doji. Okay, it's not a reversal pinball, it's not a long black candle, it's not a long white candle, is a doji. Okay, so all with the tail, okay, with the distance between the tail and the upper part of the body almost equal to the upper section. Right now, that means actually there is a lot of indecision in the market. So now the fight between bulls and bears is equal, but let's wait the end of the week before getting any conclusion. What we can see here actually is an engulfing bearish. So after a long white candle, we've seen a long black candle engulfing the long white candle. Okay, so now in terms of price analysis, in terms of forecasting, right now we should not take any action. So we cannot be bearish, we cannot be bullish. Okay, now in order to be bullish, we should be expecting a breakup, a strong breakup above this area, so above 3200 points. So 3200 points is a crucial area, is a really an interesting and important area. Okay, so only above this area we might, okay, take position, but then we should be fighting against the absolute high at 3400 points, while beneath this area, so beneath 2900 points, so 3000 is not enough, okay, because 3000 we have all these shadows area, so only below 2900 points we could trigger a short, and then we will have a lot of space till at least this area, so 2300 points. So this is a crucial area. So far we have a rectangle. The price is above, okay, as you can see here, is above the upper band, which is a negative signal because the bands are designed to be a contrarian signal. Okay, now let's move on and let's analyze the Dow Jones. Okay, and let's see what we can retrieve in order of technical analysis for the Dow Jones Industrial Average. Again, in terms of price action for the Sp500, we need to wait a little bit. Okay, what is happening right now? Obviously here we need to change the variability, okay, the variable factor for the Dow Jones. We can try with 470, and then we will adapt based on the historical volatility. Okay, we could then put something much more. And by the way, now in terms of price action, okay, as you can see here, now we have a better enveloping of the price. Okay, now let's start before analyzing the price action, and we will move to analyze the hard bands. Okay, what do we see here? Actually, the Dow Jones Industrial Average has a relative strength lower than the Sp500, and as you can see here, we have an oblique resistance, okay, by linking the absolute high around 29,500 points and all these points, okay. But what we see here again is an engulfing bearish. Yet while the price for the value for the SP500 was in a stable uptrend, okay, within the decision candle, this is a weekly chart, okay, here we see that actually is more horizontal, so the Dow Jones has a relative strength lower than SP500, okay. So now it will be more difficult for the Dow Jones to break up above this level, okay. So in terms of important levels, we could trigger along only above this area, so only above 27,000, okay. Above 27,000 points we have the chance to see the price going to fulfill this gap around 29,000 points, to be precise 28,900 points, okay. Only above the breakup we should see a long white candle with volumes breaking above this area, okay. Now in terms of hard bands, we see that, as you can see here, the hard bands are oriented downwards, okay, so the cycle is negative, which is quite different from what we have seen for the SP500 where the cycle was positive, okay. Now, in terms of bearish action, we could trigger a short only below this area, okay, so only below 24,800 points. So if we see a long black candle breaking below this area, we could trigger a short, and then we will have as a target, as a first target, 21,800, okay. So in this case, what we can say right now is that we shouldn't, let's say, trade the trend, because right now the price is moving horizontally, okay. What we could be a very good opportunity would be to actually trade in a range, so buying at this level and selling at this level. So only if you want to actually trade the trend, only at the breakup of this level, as I've been saying before, we could trigger a long, while we can trigger a short, okay, below this level. Thank you guys.